Many mutual fund investors have this question: is my money safe when a mutual fund house shuts down? Financial expert Mr. Hariharan will enlighten you on this issue now.
So these kind of so we call these as credit accidents in debt mutual fund. This has happened in the past in India with one or two one asset management company in fact has faced the brunt of all of these, and post which SEBI, which is the capital market regulator, has brought in certain clauses that in the event that so if for example I've got 100 issuances or papers with me in the fund, the one or two papers which become bad, okay, so then I have to segregate from the portfolio, create a segregated portfolio. That's called a segregated portfolio. The balance 98 valuation will be done on a regular basis like it is. The two schemes which have the two papers which are not done well, which is now segregated, will have a different valuation to be done. So it's segregated, and as and when the money comes, they will be paid back to the investor. So there are this segregated portfolio concept that have been created by SEBI to ensure that these kind of credit accidents don't impact all the investors at the same time. Because what used to happen earlier was that if because of the panic itself, many people used to put a sell or the redemption in debt mutual fund, which would then pull the NAVs further down, and the fund manager would have to exit even good securities, because he wants to give the money back to the investor. They are forced to sell good securities also. Because of the demarcation, that becomes a segregated portfolio, and the investor. So even in the case of the fund house which I was talking about, without naming it, yes, theoretically and practically also, that is where the fund manager role and the asset management philosophy becomes important. To most of the debt fund houses, when they create a portfolio, as I said, will invest in 70-80 securities. So your concentration risk is very limited with one particular security or issue, and that's consciously done by fund managers so that they don't face the kind of risk that has happened in the past. So these are some measures that are taken, but it can happen.
Thanks for your detailed explanation. Are you in search of a personal guide who can remove the stress of handling your finances? Then please feel free to avail our expert consultation. And also you can attend our webinars to gain investment related insights. Both the consultation and webinar are absolutely free, and you can find the link in the below description. Please like and share, and do subscribe to Holistic Investment.